Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap. This is our pre-market trade plan set up for Friday, February the 12th, 2016. My name is Doug McKay. I am the founder and head moderator of Quantum Leap. Each day we come together, take a look at the market, macro to micro, take a look at the structure, drill down, pick our trade levels and our targets and our hypotheses for the day. And then we do live trading during the course of the day. If you'd like to come in for a free trial, just give me a contact. I'll put my contact information up in just 1 second. One announcement is this is a holiday weekend, so the markets are closed on Monday. The futures markets are open until 1 p.m. Eastern Time. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence and your own trade plan and trade metrics. Okay, so, if you want to contact me and get a free trial, just send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog, it's just us here in the live room. It's not a commercial venture. You'll need Skype, so open up a Skype account. It's free to do and easy to do. And send me a contact request at Doug_McKay. I'll give you the invite into the live chat room. If you want to see more of these videos, there's over 300 days up on YouTube. Just search YouTube for Quantum Leap Futures or Quantum Leap Trading. If you like what I do, follow me on Twitter at Crazy2. Okay, yesterday we had a big gap down, and we were not expecting the gap to get filled. We were actually expecting to trade between the 32 area and the 1790 area, and we were looking for a neutral day. We were looking for a lot of large rotations. Well, they gave us them, and we just sort of chopped around, broke the IB to the low side, went down, didn't quite get to the overnight low. They rallied it on that news about oil, and then they pulled it back to the VWAP and the midpoint and the VPOC, rallied it again, tried to break out, tried to get above the 35 and a quarter, failed off of that target, and then came back into range. But we did break the IB to the upside and to the downside, so we ended up with a neutral day as anticipated. One thing that was interesting, and I think the news was what prevented it, is it was a low percent day. It was only a 3% probability day. We didn't break the overnight high or overnight low, which is very rare. But we did get a neutral day following a neutral day. All right, so I'm going to just start out with the news. We had core retail sales and retail sales month over month both beat. That's why we got the nice rally back up into that 48. Remember, 48 is the balance area microcomposite VPOC that we just fell out of the last couple days. 10 o'clock, we've got University of Michigan consumer sentiment preliminary, and then FOMC member Dudley speaks, business inventories, and inflation expectations from U of M as well. So we do have some news coming out at 10 o'clock, half hour into trading. So just be careful about that. Let's take a quick look. I wanted to show you this. This is we talked about the FUBAR Mr. Sneaky yesterday. This is a beautiful, beautiful example of a FUBAR Mr. Sneaky tech gap. Nice big wick, great big huge volume spike, inside bar, creates a nice large technical gap, and it rotates down, closes the gap, closes against the 20, and gets continuation down. Just a beautiful picture. I always like to start my day off just looking at the monthly and working my way down. You can see we still have this trend, this upward trend, slope and separation. We haven't violated right now. We are starting a trend to the downside. On the weekly, it's much more pronounced. We rejected off of the 9 EMA, got good slope and separation. Trend is to the downside on the weekly. On the daily, we had tried to violate the trend, but they failed, and we've got continuation, and we're starting to get slope and separation as well. Going to the 4-hour, you see we've had this trend. They've challenged it once, failed, came down, consolidated, created this technical gap, closed the gap, and then we've slowly worked our way back up. And we're currently now above the 9 and the 20 with a possibility of a upward trend starting on the 4-hour. On the 1-hour, you see we've already got the trend started for most of overnight. And got good slope and good separation on the 1-hour. On the 30-minute, same thing. Other than this dip down here, we've got good slope and separation, and we're trading at near the highs of the night. 15-minute, same thing. So as we move down into time frame, we're starting to get this rally and some trends. We do have a naked cross right here. Great example of one at 1842 and a quarter. We do have a technical gap. We didn't get the foo bar, Mr. Sneaky, but we do have the technical gap. Likely to close this gap out through time rather than price, but you never know. Taking a look at the big picture. So we were in this 3-day balance, which we fell out of yesterday and gapped down. Our VPOC, microcomposite VPOC, is 48. We've got a triple distribution zone on this microcomposite with HVNs at 30 or 63 and a quarter and 39.75. So these are going to be significant levels. And then we've got the CLVN and microcomposite LVNs basically in around the 45 and the 55.75. And you can see that the 54.50 is our 3-day value area high. We're back inside of this balance. This balance was created in between the two value areas, the one from above and the one from below. So this was the value area high from that microcomposite that went centered around the 11 and a quarter, and then the value area low, which centers around the 1890. We're in this area in between again, so I'm expecting a lot of rotations, both sides. I'm probably looking at the possibility of 57 down to, actually down to about 32. The midpoint from last night and from yesterday's range high is right here in the 34-35 area. So that is really going to be a key line in the sand. I'm going to be using 32 and a quarter as my key line in the sand below, and I'm going to be using the 55-75 above. Other than that, I think we're going to just chop around and just fill in this gap space in between. So let me bring up the overnight. So the overnight, you can see we have almost a triple distribution from overnight. This new one that we just put in, the one that centers around the 38.75, and then the VWAP and midpoint are all around this 35 to 36, but I'm going to be paying attention to the 34.50 because our range high is 34.75. So could put in a new high, but I'm going to go put the overnight high in at 38.50. Sorry, 48.50. We have the gap still open at 47. When is that gap from? From Friday, or I'm sorry, Monday, Tuesday. Wow, I can't even think this morning. Our overnight low is down at 22.50. Our overnight VPOC, I doubt is going to change. It's at 38.75. I'm going to definitely be using the 34 to 36 area. I want to be above the overnight VWAP and midpoint to get a shot at the overnight VPOC, but I want to be below 34.50 before I get short into the range from yesterday. So let's do the lower side of things. We're going to open outside of range, outside of value. Oh, let's do the daily ATRs first. Let me get that out of the way. I'm running late. 1822, 50, and our 20-day ATR is 47.58. That takes us to 1870 as a possible range. We'll have to look at this and see if that's going to be relevant. And then off of the current overnight high at 1848.50 minus the 20-day ATR 47.58 takes us down to 1800. uh, 1801 to be exact. All right, and then our, I believe our weekly high and low remain the same. I don't think we didn't put a new overnight low, and we didn't put in a new weekly high. Things today. I'm just switching my journal. I'm going to go back to my old journal. Yeah, 1884.50 we didn't take out yet, so that's the weekly ATRs haven't changed at all. Okay, so we're going to open out outside of range, outside of value. We have a LVN right here at 44.75. So I'm going to be using the 44.75 down to the 43. 43.50 is the range low from 2 days ago. So I'm going to be using this as a trade area. Below it, I want to get short into the 42s. And then, of course, the overnight Globex VPOC and middle distribution at 38.75. probably take this trade now. Man, I knew I should have shorted that. All right, and then below that, we've got 35 and a quarter. Inside of 35 and a quarter, sorry, 34 and a quarter. You want to be targeting the 32.50. And $30.50. I'm going to use 30. You can actually use, you know what? I'm going to use 28. So that's the HBN in this distribution zone. I think if we get inside of the range, most likely you're going to come down and test this value area high and take out the naked close. That's going to be a target and a trade area. Inside of there, it's all about the 1822, 1820 area and the takeout of the naked VPOC. Don't need this anymore. So let me get rid of that. Bring this down. All right, so currently trading 42s. 40, 35, 75 is a CHVN. Again, that's why I'm looking at the test of the 35. 32 and a quarter is going to be a key line in the sand. And if we get down below the key line in the sand, I'm thinking a move to take out the gap and a test. And if we get down in this area, I would expect more continuation towards that 28, 27. I'm going to use the 28 in front of it though. And then anything inside of the value area, the overnight low, of course, at 22.50, and the 20 area right in the middle of yesterday's distribution. You've got the CHVN at 18 as well. And then you've got the 1075, which is right basically at our value area low. And then 1800, you're going to have 1805, our daily ATR 1801, and then the next key support is going to be this 1875, just below. I'm going to just use 1800 flat. It's going to end up on top of each other. Okay, and then below there, all our numbers stay the same. 95, 90, 75, 70, 83 and a quarter, 70, 75, 78, 75, and then our other targets. I don't think we're going to get down there today. To the upside, if we break above, the 48, that's going to be our, a key target for us. Actually, 48.50 because the microcomposite VPOC. The next key resistance level, this I don't need here. There's really nothing up there until we get to this 54, 55 area. This is going to be a key line above. And then if we get above that, then I'd be targeting the 5850. $60 area, and then above that 63 naked VPOC, 67.75, sorry, 67 and a quarter. The ATR target, which is also going to be a trade level, and then anything above there, I'd be targeting our weekly ATR up. And the next big magnet above is still up there at the 1890, the microcomposite VPOC from the balance area that we fell out of. So that's what I'm looking at. You know, my main hypothesis is to chop in this area around 48, test the 55, 54 area, test the 34, 35 area, inside of the 34, 35, look for a push through to test the 32 and a quarter, and if we get below 32 and a quarter, I think we'll come much deeper and come down and close the gap down here at 25. What was the close? 25.75, right? 25.75. And then if we close it, we don't bounce from here, a push down into the 19s. Sorry if I sound a little bit out of sorts. All right, so let's take a quick look at where we're at in the Keltner. Beautiful double Renko reversal. You know, trade there, or I should have taken it. And can't trade and talk at the same time. Our Keltner center line is at 43.50. So right out our trade area. Above that, a move to the upper Keltner will take us up to the overnight high and that 49.50 upper Keltner line. Below the 43, a move down to the lower Keltner line will take us down to the 37 and a takeout of the retest of the Globex VPOC from above. That's what I'm looking at. It's going to be an interesting morning. Take a quick look at gold. Gold spiked up to 1263.9. It's come back into this distribution zone here. I'm expecting. We do have a FUBAR Mr. Sneaky. Probably get a little bit of a bigger retrace. I'm thinking down to the 25, 22 area and see if we bounce from there. If we don't bounce from 22, then we're going to come back and I'll be looking for that 1215 area and possibly even a move back into the composite. I don't think we're going to get away from this composite VPOC too quickly. It is the most traded price going all the way back to October 2008. If we get above the 54 value area, I'd look for them to try a little bit more. It's pretty thin up here right now. I think we're going to get some chop and finally probably get a pullback. We haven't had a pullback on this whole run up. It's just been absolutely incredible. I mean, just one time framing all the way from that 1100 area, and I got one shot and I got a good chunk of it, but I haven't been able to find a spot to get back in. Well, I did take the trade the other day. I shouldn't say that, but that was just scalping. All right, so that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you